Dunkin Brands posted earnings this morning of 29 cents a share. That was up 16% from last year and in line with analyst estimates. Sales were up 6%. Joining me to talk about those numbers is Richard Collings. He's from The Deal. Welcome, Richard.
Thanks.
So the stock is up. Was it a slam dunk for Dunkin?
It was a bit mixed. Their same-store sales for their coffee unit were up 1.7%, while for the Baskin-Robbins unit, comparable store sales were down 4.4%. They said the sales for the ice cream unit were down because of weather. It was a cold winter. I guess last winter, the year before, it was unseasonably warm, so they had that comparison.
Well, maybe they'll get a very hot summer and they'll make up for it in the summer.
Yes, exactly.
All right, well, they did add 108 stores total, 78 here in the U.S. From an M&A perspective, what do you think about those store additions?
You know, that seems pretty reasonable. They have plenty of room to expand both globally and domestically. I mean, they haven't penetrated the West as much as they have the Northeast corridor, so that's really their home base. So we could see them expand much more. You know, in terms of M&A, they were a great PE investment for Bain, Carlyle, and T.H. Lee. I believe by the time they exited last year, the rest of their investment, they had a return of 190%. So, you know, now they're free of their private equity investors. I think they're still giving them some advice on the board of directors and so forth.
But there is a lot of interest in the coffee space. You're seeing a lot of other players come into it, right?
Joey Benkaiser, which is backed by the Ryman family, a closely held company out of Germany, has been snapping up coffee properties, Peet's Coffee and Tea for $1 billion, Caribou Coffee for $340 million, and its most recent deal was DE Master Blenders, which was a spinoff of Sara Lee, and they bought that for $10 billion. So it's probably been pushing up the multiples on both Starbucks and on Dunkin' Donuts as investments in the coffee space.
All right, well, we'll talk about Starbucks in a second because they come up with earnings after the bell. Now, the multiple for Dunkin' is 6 times sales, I think 20 times next year earnings. Do you think that it can sustain this multiple? I mean, there's a lot of doubters out there. Probably about a tenth of the shares are sold short.
It's probably a little bit on the speculative side, just because, I mean, you normally don't see that kind of multiple. It does have, like I said, plenty of room to expand both domestically and internationally. But there aren't as many places to put your money if you like the coffee sector, because Joey Benkaiser has been buying up so many companies.
All right. Now let's bring it over to Starbucks. They report after the bell today. What can we glean from Dunkin' that will help us with regard to Starbucks after the bell?
You know, probably not too much. They're two different companies. Starbucks has been doing a really great job of staying pretty close to home when it comes to its own product offering. It has been making acquisitions to beef up that offering. It acquired Evolution Fresh in terms of juices, offering fresh juices in its coffee stores. It acquired La Boulange, a San Francisco-based bakery, probably to beef up its bakery offerings. And it also acquired Teavana, which is hot tea. A tea, very synergistic with its core coffee offering. So it made these three acquisitions. So it's going to be rolling these products out probably in its stores, also building up these chains, which will provide future growth. So Starbucks continues to be a really interesting story, even as it has saturated the domestic marketplace.
And we'll watch it after the bell. Thanks, Richard.
Thank you.
And thank you for watching The Street.